All right, let's talk about the two biggest streaming platforms out there, Netflix and Disney. Now, obviously, when you buy shares of Disney, you get much more than a streaming play, right? You get the whole beloved and world famous Disney brand, parks, movies, merchandise, IP, you name it. Whereas with Netflix, it's more about a pure play on streaming, right? Because yes, Netflix has an online merchandise shop. I bet most of you didn't even know that that existed. If you're one of those, do let me know down in the comments below. But with Netflix, it's a pure play on streaming. Yes, maybe in the future they'll do something big with gaming. Maybe they'll expand their IP. Maybe they'll even open a park in the future. Who knows? But with Disney, you get much more than that. So we're going to talk about both of those, more about Disney because I already made a video about Netflix. If you haven't watched that, it's going to be in the top right corner. Now, as of today, Netflix is at around $177 with a next 12-month PE of 16.4x and a price to sales ratio of 2.4x also for the next 12 months. Which, by the way, as you can see on the graph, is extremely low compared to, well, past times Netflix traded in these areas. And as for Disney, it has a PE also next 12 months of 21.5x and a price to sales ratio of just 2.1x. Also, as you can see, extremely low compared to the past. Now, granted, with their PE, that's a bit higher than the natural one, which was before COVID, because as you can see, it was also in the 20s. But way before that, it was much lower. Now remember, Disney used to pay dividends before. Since they announced and they launched Disney Plus, that is not the case anymore because they rather use that money to invest and grow that side of the business. Now, this is just a prediction, but I do believe that in 2 years' time, when they'll reach their goal by 2024 of reaching 230 million subscribers, I do think that by then they might reintroduce dividends because again, Disney is a very old, let's say old company and stock, and it's probably in a lot of people's pension funds, a lot of state pension funds as well. So dividends might become extremely attractive. Now switching back a bit to Netflix. Now Netflix, the main reason why it crashed is because, well, it missed on subscriber this month. First time that they're losing subscribers, and then they said they're going to lose even more, around 2 million subscribers next quarter. So not such great times, right? But Disney, in their report, they added 7.9 million subscribers. So you might say, oh, Disney is probably taking away Netflix subscribers. Maybe, maybe not. Don't forget that Netflix is generally bigger. If you exclude ESPN, Hulu, etc., Netflix is still the leader there. But we're going to talk about those 7.9 million subscribers that Disney added because there's a catch to that. Now, with regards to Netflix, there is more bad news that came out actually. So data provided by the research firm Antenna to the information shows that people who have been subscribers for more than 3 years accounted for just 5% of total cancellations at the start of 2022, while it hit 13% in the first quarter of 2022. Now, this is obviously not a great sign because usually longer subscribers keep on staying on the platform. But now with the whole macro environment, high inflation, etc., some people might prioritize other things over streaming. Now you might say, so why is that happening with Disney? Well, Disney is much cheaper of a subscription. But again, there's more to that. Now, before I jump into the Disney part of this video, I'm just going to show you a couple of numbers of the ad spending market in the United States. Because remember, Disney, they already announced ad supporter tier is coming. They announced a couple of rules as well. We're going to discuss that in a bit. And Netflix, they also finally announced that they're looking to add an ad supported tier, which will reduce the price of the subscription, which in my opinion is a great way to attract lost subscribers, but attract new ones as well. Now they said it's going to take some time, but apparently there are some rumors already that it might start at the end of this year already, which is to me extremely fast. And both of these streaming giants and some others as well, ad supporter tier is just going to be the norm, which is great for Roku and Trade Desk shareholders. Now, let's have a look at some numbers. So numero uno, you can see here Ustv and digital video ad spending from 2018 to 2022. So that is right now. These are stats, by the way, from 4 years ago. So it already projected such a huge growth in digital video. You can see that the red parts are increasing while the black one, which is TV, are not increasing, and last year and this year have decreased. Now, this is a projection from 2018. So obviously it has not projected COVID. And now some numbers from 2021. So this is US programmatic digital display ad spending from 2019 to 2023. So the blue line is the percentage of total digital display ad spending, which is going to be over 90%. And the red line is basically the change here. And as you can see, programmatic digital display ad spending will increase and has increased quite nicely. The change here obviously becomes a bit smaller as the market matures, but you can see how big of an opportunity digital ad spending is. And now before we jump into Disney, if you want to support the channel, check out the link in the description to receive the top 10 best stocks to buy now, or visit fool.com/couch investor. All right, so first up, Disney Plus US advertising. So Disney Plus will initially be sold as a standalone offering with video ad experiences. Now, what will that entail? Ad load of 4 minutes or less, an hour on average. The ad frequency is 1 per hour, 2 per day, 12 per week. 4-quadrant advertisers following Disney brand guidelines. Basically, it will not, I believe it will not have alcohol, cigarettes, and some other stuff. So obviously it needs to be family friendly. It will obviously be direct sales and programmatic through private marketplaces. And now the numbers. So revenue grew 23% to $19.24 billion. Income from continuing operations before income taxes, that decreased 10%. Now the total segment income increased 50%. That's operating income. I'm gonna jump some numbers here to keep it a bit shorter. Diluted earnings per share, excluding certain items, increased 37%. Then free cash flow increased 10% to $686 million. The Disney media and entertainment distribution grew 9%. The Disney parks obviously grew quite significantly, but that's normal since last year was still pandemic type of environment. So that's why you see such a huge jump here. And then again, total segment operating income is up by 50% year over year. Now I'm going to jump straight into the numbers with regards to the subscribers and the ARPU, because I think that's the most interesting part here. So first up, we have Disney Plus domestic, international, and then Disney Plus excluding Hotstar. That grew quite nicely year over year. Now Disney Plus and Hotstar grew 42% to now 50.1 million. In total, they reached 137.7 million subscribers. Everything included, that grew 33%. ESPN grew 62%, which is very, very nice. And then Hulu, the total Hulu grew 10% to 54.6. Now you're going to see why advertising is so important in streaming, and that's because of the numbers that you will see here with Hulu. As you can see here, 12.77 ARPU, up 6%. Live TV plus SVOD is up 8% to 88.77. And now here comes, you can see that I highlighted here these numbers, Disney Plus and Hotstar. Now the majority of the 7.9 million subscribers that Disney added comes from India. And yes, although the number itself might be impressive, it's not impressive at all when you see how much they're paying there. Close to nothing, right? 76 cents average monthly revenue per paid subscribers. Yes, that's up 55%, but still it's close to nothing. Now, if you look at the other numbers here, the US or internationally, yes, US is up 5%, internationally is up 24%, but still Netflix average is almost double that of Disney. Now, I do want to add that Disney Plus is not available in as many countries as Netflix. They do plan to open up to more and more countries this year, this summer, and by the end of the year as well, which is obviously going to help Disney Plus, well, that side of the business, grow its subscriber base and grow ARPU as well. Now, again, with the big headlines that Netflix is losing and Disney Plus just added 7.9 million, of course, a lot of people might suddenly be bearish on Netflix and super bullish on Disney. But then again, if you add customers, viewers that just pay 76 cents, doesn't really matter much whether you add 7 million or 5 million. Maybe in the long term, yes, because you can raise those prices, but those are countries where it's extremely price sensitive. And as we've seen, Netflix ARPU, let's say, is I think just above $10 or so, the average. Disney is much lower than that. I'm not talking about the Hulu part, but then again, I showed you why advertising an ad-supported tier is extremely lucrative. And hopefully by the end of the year, you will see it with Netflix as well. So overall, when you buy Disney, you get much more than the streaming side of the business. Of course, it gets a premium because it now has Disney Plus. Before, you never seen such multiples on Disney. And again, I will stick with my prediction. I think that in 2 years' time, they will be adding dividends again. And that will be extremely interesting to see how the market reacts on that. Now, when you buy Netflix, right now you're buying a broken stock. In my opinion, not a broken company. I think it's the right move to make this huge U-turn and go and add that ad-supported tier. And maybe in the future, they'll even add live content, sports, who knows? Overall, I don't think you can go wrong with either of them. I'm a huge fan of Disney. It's in my portfolio, although with all the political stuff right now, I've not added any single share. But over the long term, especially at these prices, you cannot go wrong with either of them. Now, do share your thoughts down in the comments below. Do you hold Netflix or Disney or maybe both? Down in the comments below. And if you enjoy this type of videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always, guys, take care, stay safe, and see you all in the next video. Bye bye.